Okay, so here's your end of chapter exercises. I'm going to start on exercise 2-1. So this is going to be your basic accounting equation. So I'm going to write it up in a horizontal format. So assets equals your liabilities plus your equity. That's the basic equation. And in this particular problem, they want you to figure out the amounts of the equation. So as I go through these, you have to start to practice, well, recognizing and classifying what exactly are these accounts, what do they represent. So the first one, which is cash, guys, cash is an asset. So cash is $41,500. I go to the next one, laboratory equipment. Again, that is a benefit to the company. That equipment is always considered an asset. So I'm going to write that right over here on the asset side. So equipment, which is $76,600. The next one I come up with is lab supplies. Again, that's another benefit. It provides a benefit to the company. That's considered an asset. So on your supplies, I'm going to write this here. That's going to be $7,800. And then these first three are your three assets. The rest of them are not going to be assets. The loan payable and the accounts payable, when I'll get to this in a moment, those are going to be considered liabilities. So in this particular example, they give you the first three are considered assets. It's basically what the company either owns or that they use to provide benefits to the company. So if you were to total these three items, you'd come up with $125,900. Okay, so your total assets right here would be $125,900. Now remember, the equation has to balance. So your liabilities, think of anything that you owe, which is like a loan, debt, is considered a liability. And so what you'll find out in this class is that typically if you look for the word payable, payables are always considered liabilities. So in this case, if I look at my liability side, my liabilities are going to be 16,100 plus the 10,125. So that's going to give you 26,225. So $26,225. Notice I'm putting this under the liability category. So again, I'm going to still squeeze in this equal sign here just so you know that the equation has to balance. And then the last thing they want you to figure out then is equity. So remember, your assets is on the left side of the equation. On the right side is your liabilities plus equity. So in this case, since we know the assets is 125,900, the liabilities is 26,225. To figure out this unknown, all you have to do is subtract. And so if you take 125,900 and you subtract the 26,225, that's going to give you $99,675. That's what you'd put in there for equity. So 99,675, and that's your answer. So if you take your liabilities, which is 26,225, add that to the equity, that'll proof it. That'll make sure that it totals your total assets. So just to start you off with, this is how the accounting equation works. It always has to balance. Okay, now, second thing is this down below, this is exercise 2-2. They've already given you your basic accounting equation and they want you to fill in the amounts. So just remember, the equation has to balance. It has to always be equal. So if I started off with the first one, I'll just do a couple of these and you have the answer to these in Blackboard. But just to show you this, so if your total assets is 27,800 on the left side of the equation, that means that everything on the right side of the equation has to be the same amount. So to figure out the unknown here, which is equity, again, you would take the $27,800 and subtract the $5,560, and that's going to give you $22,240. That would be your equity. So again, it's just simple math. You just have to make sure sometimes you're going to add, sometimes you're going to subtract. You'd solve the second one basically the same way. Now look at the third one. The third one, notice they give you the assets and equity, but they don't give you the liabilities. It's the same idea. We still have to subtract to get the unknown. So on that one, again, you take the 16,075 and you subtract out the 10,400. Again, that would give you your liabilities, which in this case is going to be $5,675. You'd put that right there. Okay. Now, if you look at the other ones, number 3 and number 5 are the same. Number 4 is they give you liabilities, they give you equity, but they don't give you the assets. So again, to figure out that unknown, all you have to do is add those. So if you take 32,325 and you add the 4,400, obviously you're going to get 36,725. That would be your total assets. So good. I wanted to give you a couple illustrations to get you started here on the number one, the accounting equation, and just to emphasize it's not difficult, but you have to start to recognize that the equation has to balance. This first one up here, you have to start to classify. So you have to be able to know and recognize what are the different asset types of accounts and liability accounts to be able to apply this thing. Okay, so this is exercise 2-3, and we're going to do some applying of the accounting equation. So I'm going to go ahead and symbolize it over here. So assets equals liabilities plus equity, just very general on this one. And some of the future ones will be a little bit more specific on how to classify the accounts. I'll start with number 1. The owner invested $90,000 cash into the business. So cash is an asset. So you do plus 90,000 on the asset side, and you'll find out later on that all investments are considered equity or capital types of transactions. You'd also put the plus 90,000 under the equity. So that would be the first one. On the second one, it says you purchased $26,700 supplies on account. So anytime you see this on account, that's going to be a liability. It means you haven't paid for it yet. You can still receive it, but you can pay later. Supplies is an asset. So I'm going to do a plus $26,700 on the asset side. Now remember, we have to balance. So this is going to go as a liability. I'm going to put $26,700 as a plus to the liabilities, because anytime it's on account, guys, that's going to be accounts payable. Okay, so that's the second one. Then I get to the third one. It says you purchased equipment for $21,000 cash. So in this particular problem, we have two things going on. You bought some equipment, which is an asset, and you paid cash, which is an asset. So a number 3, it's basically increase asset and decrease asset. So you'd say plus 21,000 and minus 21,000. And of course, later on, we'll be very more specific in terms of where to put these. But we'd put $21,000 into an equipment account, and we take the $21,000 out of the cash account. So this is just a wash on your assets, a plus and a minus, an increase and a decrease to your assets. All right. Now I get to number 4, and it says you paid $6,000 rent in advance. So anytime you get anything paid in advance, we're going to call these things prepaids. And prepaids are typically considered also assets. So in this one, you'd also have a plus 6,000 and a minus 6,000. So the plus 6,000 would go to the prepaid rent account. The minus 6,000 would come out of the cash account. Okay. Now I get to number 5. It says you perform services for $7,800 cash. Anytime you see a perform services, that's going to be a revenue item. And of course, you have to have at least 2 things affected. So cash is the other item. So we're going to be doing a plus 7,800 on the asset, and revenue is considered an equity item. You put plus 7,800. Again, this is under this equity account, or this equity column on our accounting equation. Okay, so that would be number 5. Then I get to number 6, and on number 6 it says you paid $2,160 for utilities. Well, anytime you pay something that's cash, that's an asset, so that's going to be reduced. So that's going to be a minus to cash. And utilities is going to be an expense, and that's going to go under the equity side. It's going to reduce equity. I'm going to put a minus there. So $2,160 under the equity side. Okay. Now I'm getting a little low on space here, so I'm going to kind of probably put some over here, but I can get number 7 in. Number 7 says, again, you perform services for $10,500 on account. If you compare and contrast number 5 and number 7, the really only difference is one is a cash item and the other one's an account item. Now, this is not accounts payable, it's going to be accounts receivable, because it's money owed to us. It's the other way around, which is also considered an asset. So you'd put a plus 10,500 as an asset, that's accounts receivable, and you put the plus 10,500 again here under your equity item. So that would be number 7. All right. Now I'm going to go over here because I kind of run out of space a little bit here, but let me just let's erase 1 through 7. You can go back and review this. So now we're on number 8. I kind of just hope you can remember the numbers. Number 8, which is received $6,600 from charge account customers. So what that's going to be is you're receiving cash. That's a plus 6,600. And from a charge account, guys, that's really accounts receivable. So that's your other asset. That's going to be a plus and a minus to your asset. So it's basically money you had sitting on your accounts receivable. You were waiting to collect it, and now you just collected it. So this is another increase, decrease to your assets. Number 9 says you paid salaries to your employees. That's going to be cash. That's an asset. So you're going to reduce your assets by $4,500, and that's going to be an expense. So minus $4,500 under your equity. And then finally, the last one says you paid $6,000 to a creditor that was on account. They're basically telling you here you're paying your liabilities. So that's going to be a minus $6,000 to your assets. So you're reducing cash, and you're also going to be reducing your liabilities by $6,000. So notice I'm putting this under the liability section. So again, minus $6,000 asset, minus $6,000 liability. I just walked you through the basics of how to analyze transactions under the accounting equation. Always remember that there's always at least 2 things affected because you have to balance. And study this because a lot of the ones coming up, if you can master a problem like this, the future exercises you'll practice in the upcoming chapters are very similar to these types of transactions. Okay, so notice on exercise 2-5, this is another accounting equation type of problem, but notice they've already given you the account titles just to make it a little bit more clear where the increases and the decreases go. So I'm going to use this at the top, and for each one of these, I'm going to go ahead and just write up where the amounts should go. So number 1, John Amos started the business with a cash investment of $60,000. So again, you'd put $60,000 under the cash, that's a plus, and of course that's an investment. We're going to use this account called capital. So you put the plus $60,000 under the capital account. Okay, so that's how you do it. So notice these 3 right here. You got capital, revenues, and expenses. Those are all under the equity category. So that's number 1. Number 2, it says purchased equipment for credit, $22,000. So here's your equipment. That's an asset. So plus $22,000. And of course, on credit is going to be accounts payable. Notice here's your equal sign. You do a plus $22,000 under accounts payable. That would take care of number 2. Number 3, perform services for cash, $3,100. Remember, cash is going to be increased. That's an asset. So that's a plus $3,100 to cash. And performing services is always revenue. So over here, notice I do a plus $3,100. Notice my equation balances. That's number 3. Number 4, it says purchased additional equipment, and this time you bought for cash. Notice if you compare number 2 and number 4, it's the same type of transaction except one is on credit and the other one is for cash. So again, equipment is going to be a plus $4,600. And notice because we paid cash, it's going to be a minus $4,600 over here. We still balance. Plus $4,600 minus $4,600. Notice this is only the asset section on number 4. Number 5 says perform services on credit. So notice if I compare number 3 with number 5, it's the same type of transaction except one was a cash transaction and the other one's a credit transaction. Well, in this one, it's not accounts payable, it's going to be accounts receivable because we're going to be receiving money. So notice there's my accounts receivable. I put the plus $5,050. Okay, that's your AR. And then again, revenue is the other side, so plus $5,050. There's your balance. That's number 5. Number 6, paid salaries to employees, $4,450. That's going to be cash. So minus $4,450 to cash. And this is going to be an expense. So I'm going to put the minus $4,450 over here with the equity side. That would be number 6. Number 7, received $3,200 cash from charge account customers. So you're going to put 3,200 plus to cash. Your charge account customers was accounts receivable. That's a minus 3,200. You're basically just collecting money that's owed to you. So in this case, the only items that are affected are two assets: increase cash and decrease accounts receivable. That's number 7. And then finally, number 8 says you paid your creditor on account. So it's going to be minus $13,000 to cash and a minus $13,000 to your accounts payable because you're basically paying your debt. Now, I would highly suggest go and look at your solutions on this in Blackboard. It's going to keep all the numbers continuous. I'm just trying to show you this illustration because it's easier for me just to write it out using this as the title. But I hope this helps guide you a little bit as you start to practice, again, analyzing transactions to see exactly where they fit in with the accounting equation. Okay, so this is exercise 2-8 on number 1, preparing an income statement. We're going to go ahead and do all the financial statements though, because this is basically going to be 2-8 and 2-10 that I'm going to walk you through. So to start you off with, I'm going to put the income statement up over here just to kind of give me a little bit of space. So the first thing I'm looking for is my revenues. My revenue item here is going to be fees income, which in this case is $77,900. And then of course, from that, I'm going to list all my expenses. So look for anything that says expense. So we've got advertising expense, which is right here. That's $6,500. We're going to be subtracting that. We've got salaries expense of $16,000. I'm going to write this here. So we got our salaries. We've got the telephone, which is $800. And I believe that's all. So on this one, they only gave us 3 expenses. So if you total your expenses, that's going to be $23,300, but I'm just going to go ahead and subtract these. And of course, in this case, we're going to actually get a net income item of $54,600. Our revenues of fees income are enough to pay our expenses. So in this case, we wind up with a net income. Okay, so this is financial statement number 1. The second financial statement, which we call as our equity statement, okay, so what you do on that one is you start off with your beginning capital balance, which they give you here in the problem, is $26,700. Now, this income number from your income statement is going to be transferred to the equity statement. So you're going to say add net income, which in this case was $54,600. So again, I'm hoping you're seeing there's a relationship, there's a connection between these financial statements. You're then going to subtract what they call the withdrawals. So withdraw, they withdrew, looks like $9,000. That's going to be a deduction from equity. Okay. And then once you do that, you're going to get what's called an ending capital balance. So in this case, it's going to be right at $72,300. So this would be your second financial statement. So number 1, income statement. Net income gets added to equity. And by the way, if it was a net loss, you would be subtracting it. But in this case, it was a profit. So net income gets added. And then we come up with a new equity balance using this equation. And then, of course, the third financial statement is called your balance sheet. And think of this is basically just your accounting equation. So we've got your assets equals liabilities plus your equity. And so for the assets, I go back over here. I'm just going to list them. You've got cash, you've got accounts receivable, you've got your supplies, and I'm going to run out of space here, so I'm just going to kind of write these shorthand. Supplies, and you've got your equipment. So you have $33,100 of cash, you've got $4,000 in accounts receivable, you've got $3,400 in supplies, and you've got $37,500 of equipment. So if you add up your total assets, you get $78,000. And remember that your assets have to equal your liabilities plus your equity. Okay, now your liabilities in this case consist of accounts payable, which is $5,700. So I'm going to kind of squeeze in AP, which is $5,700. That's your liabilities, and that's the only one. Now, to make this equation balance, do you see this ending capital balance that we came up with the second financial statement? That's going to go right there. So your capital balance, which we came up with, was $72,300. If we were to add that to the $5,700, guess what you get? There's your $78,000. So this would be how your basic setup of your balance sheet looks like. Again, I just wanted to give you an illustration of how to put it together. Always know there's a relationship. Income statement is your first, that's always the first financial statement you do. Then that flows to the equity statement, and then that flows to the balance sheet. So again, go in and look at the solution manual I've given you in Blackboard. It has a little bit, more of a formal approach to showing you the results, but this is basically how you would calculate the answer.